Are we in a new bear market? That's a question that's on the minds of many investors right now. And joining us again today to give you his view on the state of the stock market, Mike Larson, editor of Interest Rate Speculator. Hi, Mike. Thanks for joining us again today.
Hi, Mike. Glad to be here.
So let's set the stage here, Mike. We've seen a sharp correction in the S&P 500, down about 13% at the August low. And then that was followed by a sharp rebound rally of about 8% or so over the last month.
Yep.
But you think we could already be in the early innings of a new bear market. What tells you that?
Well, I think the chances are growing every day that a bear market really is already underway. And, I'm basing that view on these time-tested fundamental and technical indicators that I've been studying and really following for almost 2 decades. Many of those are breaking down, and it's happening one right after the other.
So you believe the recent rally is just a head fake that's about to fail?
Yeah, and I'm doing my best to help people not to get fooled by it. And that's why I've been very active over the past few months. I've been telling my subscribers to take action after action, which generally speaking is lowering their market exposure, raising cash, and hedging them against or even helping them profit from downside in the market.
Good advice. Okay, so if you're correct here and we are entering a new bear market, are there any lessons from the last 2 major bear markets, the ones that started in 2000 and again in 2007, that investors can apply again today?
Yeah, absolutely. I mean, the first lesson is just use common sense. As those previous bear markets grinded on, I lost count of how many Wall Street shills were coming out and proclaiming a bottom, saying over and over again that this is it, the worst is behind us.
Yeah, but those calls, of course, didn't square with the facts, what we saw happening all around us.
Well, exactly, and that's why you just can't trust most of that sort of conventional wisdom, and I say that in quotes, that you're going to hear on CNBC or read in the Wall Street Journal during a bear market.
Right.
I mean, go back to the dot-com boom. You remember all those analysts who were publicly touting internet stocks right up until they went belly up? Or in the housing bubble, remember how many Fed and Treasury Department officials would come out and say the housing market decline was well contained, but we could all see that it was going bust and dragging the entire financial system down with it.
That's right, and that's a great point. Wall Street simply can't admit publicly how rotten things really are because it's bad for business.
Yeah, it's sad, but that's exactly right. I mean, that's why your best bet is to follow independent, unconflicted analysts who don't have that axe to grind. They don't need to publicly lie or stonewall or whatever to keep you from taking protective, wealth-preserving, or wealth-building actions in a down market.
That's right. So, what defensive measures should investors consider taking right now to help protect wealth in a bear market scenario?
Well, understand that brokers and fund managers want you to do nothing. I mean, they don't make as much money if you yank your funds out or if you raise too much cash.
True.
So they're going to fight those actions tooth and nail and just tell you, sit tight, ride it out. But frankly, that doesn't make any sense to me. I think that you'd rather take 2 defensive steps with confidence. I mean, if you're reasonably confident that that bear market's unfolding, raise cash now so that you have more capital to reinvest as close to the bottom as possible.
Right. And what's the second step, Mike?
Well, I think you can even go a step further. I mean, why not try to profit from a bear market decline, just like we all try to profit during a bull market advance?
Good point.
I mean, there's dozens of highly liquid inverse ETFs available now, and they're designed to profit from falling markets and rising volatility. Some use leverage as well, so they may not be a good fit for absolutely every investor out there. But if you do your homework, you're going to find lots of ways to profit directly from falling stock prices.
Okay, so even if a new bear market is not 100% confirmed yet, these are some smart steps you should at least consider taking right now, correct?
Absolutely, and I mean, bottom line, this is no time for complacency. I mean, you have to go back and remember that these defensive measures really paid off in spades when the markets began rolling over in 2000 and again in 2007. So I believe that's exactly what you have to start doing now in 2015.
In fact, you believe so strongly about this that next week, Mike, you're hosting a special presentation on this very topic, aren't you?
That's absolutely right, Mike. It's going to be called The Return of the Bear Market. And this is a full audio-visual presentation that I've put together with all the details about how to invest, survive, and thrive if the bear truly is back.
I look forward to that presentation, Mike. Thanks.
Thank you.
And if you would like to join Mike for his special briefing, The Return of the Bear Market, simply click on the link you see below on your screen. You won't want to miss it. Thanks for joining us today for Money and Markets Extra, and until next time, good investing.